Hi, this is Andy Hoffman of CryptoGoldCentral.com, the sound money blog of the 21st century. Try my free 7-day trial membership and contact me at ahoffman@CryptoGoldCentral.com to arrange cryptocurrency or precious metal consultations. In today's audio blog, my second of the week, I'm again back to assuage investor fears in what is turning out to be as wild and crazy of a year as 2017. Only now, fundamental issues are not in play with Bitcoin, as opposed to then, when, amidst the paralyzing, at times terrifying uncertainty surrounding the scaling debate, Bitcoin's very viability was in doubt. This year, the principal issue is the aftershocks of the January crypto crash, despite the bottom having very likely occurred February 6th. Due to the massive losses accumulated earlier this year, to the tune of 80 to 90% in a few short weeks, many crypto traders and short-term thinking investors have hair-trigger reactions when it comes to incremental FUD, particularly altcoin holders who just experienced massive gains in April, thus yielding more dramatic, terrified profit-taking than Bitcoin. In fact, today's dominant story is as non-fundamental as it comes, i.e. the Mt. Gox Trustees transfer and very likely sale of an additional 8,200 Bitcoin. Aside from Bcash, which is also being sold by the trustee, there's not a whit of connection between what's being sold and the supply-demand balance of altcoins. And yet, Bitcoin dominance surged 2 percentage points this morning, as fearful altcoiners panic sold to prevent losing the value they recently recouped from January's horrific decline. In a nutshell, the nightmare known as Mt. Gox, which nearly destroyed Bitcoin in 2014, continues to torment Bitcoin holders today and the entire crypto space 4 years later. In this case, due to a cruel twist of fate that somehow left nearly 200,000 Bitcoin in the hands of a trustee tasked with selling it in completely unpredictable fashion to ironically pay off the Bitcoin holders they were stolen from. I mean, think about it. Investors had 197,000 Bitcoins stolen from them due to the hack of the Mt. Gox wallets, potentially, but impossible to prove due to an inside job. Those coins were worth $1,000 at the time, but nearly 9 times that amount now, and 20 times that amount on December 17th, the day the trustee started dumping them on the market, literally commencing the deluge the day the market topped and ending the sale of an initial tranche of 35,000 Bitcoin with a flourish on February 6th, when a whopping 8,000 were dumped, the lowest at the crash low of 59.70, which I might add represents an exactly $100 billion market cap, which couldn't make it more obvious that the institutional investors I spent all fall talking about entered the market at that key investment threshold and waited like vultures to snap whatever was sold at that level. So a top crash in the market by 70% for the second time in 4 years, this time whilst in bankruptcy, the Mt. Gox arbitrators decreed that investors will not receive the Bitcoin they lost, but the fiat currency value at the time of bankruptcy. In other words, just $1,000 or so per Bitcoin, despite the current price being $8,600, and $9,400 yesterday, just before the Mt. Gox trustees started selling. Not only that, but the lawyers who negotiated this horrible settlement will get more than the class action plaintiffs combined. And as a further insult to injury, what's left over of the proceeds, after paying $1,000 per Bitcoin to the plaintiffs who bothered to join the suit and the lawyers who negotiated, goes to none other than Mark Karpelès, the jailed Mt. Gox CEO who oversaw the largest fraud in cryptocurrency history. True, he'll never see a penny of that money due to additional lawsuits that will no doubt consume it all. However, the fact that 4 years later, with Bitcoin's fundamentals never stronger, we are being subjected to a second Mt. Gox-related crash, which has been ongoing off and on for 5 months, could not be more infuriating or ignominious. Regarding the actual selling process, what perturbs and baffles me most is the fact that in contrast to the blatant lies the trustee has spewed to the media, he is clearly dumping the Bitcoin on exchanges without the slightest regard for price maximization. Given my background as one of the world's leading exposures of market manipulation in stocks, bonds, currencies, and of course, precious metals, I'm finding it difficult to believe something far more nefarious isn't going on here than just the horrific deal negotiated with plaintiffs. What I mean is that it's difficult to see why he is selling on exchanges when he could easily do so in the over-the-counter markets at much higher prices with zero market disruption. This is how large block trades have been done in legacy financial markets, like the many I participated in when working as a sell-side analyst at Solomon Smith Barney from 1999 to 2005. To wit, anytime a large block comes up for sale of a tightly held security in which the reason for selling is known to be for non-fundamental reasons, the bankers tasked with selling it market it over the counter to large investors, who in most cases buy it in an auction-style transaction that typically yields an above-market price, which in this case would no doubt have occurred if the trustee had used this method, which not only would maximize sale proceeds, but be the most responsible fiduciary alternative. I mean, what was the reason to smash prices with unfettered selling into illiquid markets? My skeptical side wonders if the government and/or Bank of Japan ordered the sale to be done in this chaotic manner to enable them to accumulate Bitcoin at fire sale prices. But my practical side says the guy is, plain and simple, stupid. Following the sale of 35,000 of the trustees' 197,000 Bitcoin stash in December and January at prices between 6,000 and 20,000, an additional 16,000 were moved from the trustees' cold wallets on April 25th, with the price of Bitcoin at $8,900 at the time. The subsequent decline was quite muted to just $8,750 before surging to $9,500 2 days later. Why did the price not plunge then? Or why did it surge thereafter? Was the Bitcoin not actually sold but just moved? Or was it actually sold OTC, which I highly doubt, as unquestionably a trade of that size would be reported somewhere, possibly by the buyers themselves, overtly or covertly, to generate bullish sentiment. Then yesterday morning, with the price of Bitcoin trading eerily calmly around 93.50, he moved another 8,200, which unquestionably was sold as at mere hours later, prices started violently declining, as usual lately for no apparent reason. The selling continued all day and night, typically in waves of massive volume, pushing the price as low as $8,500 compared to $8,600 as I speak. No doubt exacerbated by the typically hyperbolic mainstream media coverage, like the vile sellout Tyler Durden of Zero Hedge. Yes, I know he's the main character in the Fight Club, who not only cited the Gox Trustee, but dropped additional FUD bombs to scare people further of a so-called raid of the Upbit crypto exchange in South Korea, and LOL, a profit warning from tech company Nvidia due to weakness in cryptocurrency-related revenues. Following the April 25th move of 16,000 Bitcoins from the trustee's wallet, all manner of explanations have been given for the subsequent highly enigmatic price action, as it was so starkly different than the action subsequent to the December 17th through February 6th wallet movements, as well as yesterday's. However, Occam's razor would say nothing was actually sold after April 25th, thus yielding the additional possibility that what has occurred over the past 20 hours is the sale of both the 16,000 Bitcoins moved in April and yesterday's 8,200. Either way, creating an enormous amount of uncertainty regarding the potential timing and method of selling the final 137,000 coins. In other words, FUD actually rooted in reality, despite it resulting from entirely non-fundamental factors. That said, the market is far larger and savvier than FUD-stricken sellers give it credit for. As once the smoke clears from the capitulation-style selling witnessed this morning, institutions will look long and hard at the facts of the Mt. Gox trustee's assets and motivations, potentially through personal conversations, as they do everything possible to contact him to acquire any tidbits of information they can to gain a competitive advantage. And once they do, word will spread rapidly of the most likely scenarios, catalyzing them to position themselves to acquire as much as possible at the best possible price, with the assumption, of course, that other institutions and wealthy investors will be competing with them for the final Mt. Gox supply. Perhaps at some point, the trustee will in fact utilize OTC channels to sell his remaining stash. But irrespective, keep in mind that for all the hype of the massive, terrifying Mt. Gox overhang, the remaining amount of just 137,000 Bitcoin is worth less than $1.2 billion at current market prices, compared to 200 to 300 trillion of liquid assets in the form of stocks, bonds, and currencies in the legacy asset markets. In other words, chump change for the thousands of institutions, and heck, billionaires that at some point will either want or need to own Bitcoin. To that end, just as the consensus of thousands of investors in the past 24 hours was to sell out of blind fear, a new consensus will develop when the smoke clears, just as it did when a cumulative stand was taken in the form of a wall of institutional demand at the aforementioned $100 billion market cap level, causing the price to nearly double in the ensuing 2 weeks, before settling into an increasingly narrow consolidation range in the following 3 months, at prices levels like today, well above those that prevailed when the initial rally commenced last summer at just under $2,000. Ultimately, no one knows exactly how and when the end of the Mt. Gox overhang will be discounted, let alone when it will actually be sold. However, given how small the remaining amount is relative to the size of the overall Bitcoin market, the increasingly transparent means as to how it appears to have been disposed, the heightened possibility that the exposure such gross fiduciary breach has generated will cause the trustee to use the OTC or auction markets for future sales, and the increased likelihood that now that the cat's out of the bag, the trustee will be pressured to complete the process sooner rather than later. And my speculative expectation is that this issue will be in the rearview mirror by year end. And trust me, once the market starts discounting the end of the Mt. Gox overhang, both financially and psychologically, the resulting rally could be so powerful it puts last year's price explosion of Bitcoin and altcoins alike to shame. Either way, as I sit here this morning with prices at 8,600 compared to 9,300 yesterday, I cannot be less worried now that I know that, as has been the case during every Bitcoin price decline since the scaling debate was won last summer, the current episode is also due entirely to non-fundamental factors, which ultimately, perhaps inevitably, will work to the upside in equally violent fashion. To that end, I eagerly await the market's reaction to the fact that, one, it's highly likely that by now, most or all of the latest Mt. Gox trustees selling is over, whilst two, Bitcoin's fundamental outlook has never been stronger, and three, the world's biggest cryptocurrency event, New York City's consensus, starts on Monday. Thanks, and have a great crypto day.